Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at oil, we had the inventory report today due to the holiday week, and I drew this uptrend support line on the 4-hour chart yesterday in the video, and I really like the way it looks because I really like the price action right off of that level. And again today we bounced just above it, and it's currently right under $51 psychological support. So we're still seeing some weakness in oil. Certainly not really a very emphatic bearish nor bullish reaction to that inventory report. And we need a catalyst for the bulls to maintain this support level and head back up to 52.06 resistance. And of course, that inventory report was not the catalyst the bulls were looking for, as we didn't really see a whole lot of upside. We saw a little bit of a pullback. It wasn't a significant pullback, but really lackluster performance by the bulls. So right now we're looking at that support. I'm looking at 50.89, the low of yesterday, and the high of this bounce attempt, 51.85 is currently the range to be watching. But the bulls need to turn things around, because if we break this uptrend support line, it has some bigger, broader implications on the longer term time frames by breaking that support. So let's look at the daily time frame. And we can see that if this support were to be lost, we have our lower highs and lower lows in play, and we would likely see another lower low. We would have to break 50.75 to break that lower low, but as we see the bears having momentum, this needs to see follow through. And what I mean by this, I mean this doji. So this indecision doji right now, because it's coming after a little bit of a pullback, it does slightly favor the bulls because we are bouncing off a support, and we see the bulls and the bears pretty much equal in their battle today. So we need a green day tomorrow to confirm this doji, head back up towards 52.06 resistance. Then I'd be looking at 52.76, followed by this little double top at 53.49 and 53.47. So an important day tomorrow for the bulls to get a nice green confirmation candlestick to confirm this doji, because if we break 50.75, we're looking down at 50 psychological, and it does look like you could draw this head and shoulders bearish reversal pattern that is forming on the daily. And there's the left shoulder, there's your head, and there's your right shoulder. And this neckline is that line that I drew on the 4-hour chart, hitting all those supports. So a break of the neckline is confirmation of the bearish reversal head and shoulders pattern. So at all costs, the bulls want to hold this uptrend support line. And I did draw on the hourly time frame a little bearish reversal head and shoulders pattern on the other day, where we had our left shoulder, the head, the right shoulder, and it didn't break then, but it did eventually end up breaking. So a very key support level to be watching, and the question is going to be, can the bulls see some upside tomorrow, break the high of the bounce attempt today, which ended up being down here at 51.85. That's the level to break tomorrow for the bulls to be looking to confirm this candlestick. We'll check back in over the weekend to see how it all played out. I appreciate you watching. Have a great night.